Good afternoon, everybody. Welcome to today's Stock Market Brief show. It's September 24th. If you're new here, this is a show where we navigate the financial markets through the lens of technical and inter-market analysis. So if you like charts, if you like getting into the weeds of things and seeing what may happen in these markets, make sure to hit the thumbs up like so and subscribe to the channel. In today's video, we're going to take a look at the overall markets. We're going to look at some of the signal charts taking place, what's going on there. We're going to look into the Mag 7 and where they stand within their weekly expected moves. We're going to take a look at market conditions. One of the most important aspects of this entire show is constantly diving into what the market's telling us, because this is how we can determine what strategy will work best in various conditions. We're also going to hop into the expected moves going in for tomorrow's trading session on the S&P 500. If you want some more additional content, make sure to look at the pinned comment. There is a Patreon link / Discord where we do all types of stuff there. I'll spare you from talking about the benefits on this show, but it's only $16 a month. It's even cheaper if you buy it annually, and you can see all the benefits there that are listed. Let's get into today's show. All right, everybody, welcome back to the show. We are looking here at how the market performed today. We had another down day. Oh, heavens no, heavens no. S&P 500 was down a whopping 28 basis points. We had energy leading the way. We discussed how energy outperforming the S&P 500 is not a bullish sign for the markets, and well, it outperformed today, and look what the market's doing. We also had utilities outperforming the market, which is also, will show momentarily, not the greatest sign, especially when you start to look at this from a larger time frame, and we'll discuss more about that in this video. We'll take a look at the S&P 500 on the daily time frame. We've had 2 down days. Holy moly, people. It looks like the world's falling apart. Not really. We do have that bearish divergence that's kind of playing through, I'd say, as it stands right now. But these 2 down days came on some decelerating volume. So, is it anything to really, worry about right now in the moment? No. It's still well within this bullish channel. If it comes in a little bit, maybe the 6,600, we'll start talking about, various levels if it were to break 6,600. But right now, that would be kind of where the market's focus point is. And we have some key gamma exposure levels in and around that area too. Now, if you take a look at SPY, you can see that, hey, not only do we have this channel, right, going up like we just showed on the prior chart, but you do have this pretty tight wedge formation. So not only is it in a bull channel, but you also, I guess, if you want to look at it in the lens of a wedge, all this is telling us is, I know rising wedges people will say it's bearish, it breaks down, whatever. The point that I'm using here with just highlighting this is just that it is getting very tight. So when it gets tight, all of a sudden volatility can expand, and volatility can expand in both directions, right? It can break out to the upside and squeeze higher, it can break down and then shoot back up and then come back down. It's just coming to the apex of this where it's likely to see some increased true ranges of the S&P 500. The dollar also found some strength today. Is it trying to break out of this down trend line? And if so, what would that mean for the markets? Well, as we know, a dollar up and yields up has not been historically great for the overall market. So the dollar started to see some strength today. And if you remember in prior videos, September, right, we talked about how for Trump's first term, how in September, in the middle to the beginning, right? That's where we found a new low for the dollar on the year in 2017. And from that point, we actually started to see it bounce higher until maybe mid-November before rolling back over. So if we're going to kind of play out that type of same move in the dollar, perhaps we see a bounce up, which puts pause and, time for consolidations, pullbacks in the market, and then perhaps setting us up for some type of rally into the year end. Now we can take a look at the 10-year yield after the Fed cut rates, and the yield continues to kind of press higher over here, and oil as well is starting to break a little bit higher. That's that black line right there as well, and yields typically follow. So if oil continues to move higher, typically means that's good news for energy stocks, and it typically means that you might see something like the yields continue to rise here too, which could overall put some stress on the market. We've been kind of talking about this, and now we're just seeing it happen for like the last couple of days. Nothing crazy though. If we take a look at utilities relative to the SPY, this is based off of some research through Michael Guyad called the beta rotation strategy. And in short, why I like to show you this is when utilities outperform the S&P 500 on a 4-week basis, basically when it crosses above the 0 line over here, that's what this is measuring, the rate of change of utilities versus SPY. It's likely to see potential increases in volatility. Now, it doesn't mean that it's going to happen. It just means that we're in an environment where it's more more likely to happen. So if you look at this chart, take a look, see how this crossed above this line over here. And what do you notice kind of just going down while it's above that line? Well, that's when February we started seeing, obviously, what? There we go. Started seeing more volatility at the beginning of the year. Over here, right, we started to see it go above the line. And what did you see happen? Well, we saw this down week in the S&P 500, right, creating a little bit of volatility there in July. Okay, we can continue out a little bit more, and you could say over here, right, what happened? Well, we saw this take place. We had, the market sell off a little bit here. So there's been many times where this has been the case, but is it like 100%? No, not necessarily. It just tells us, simply put, that you might need to take your foot off the gas a little bit, because there's a higher probability of volatility to kind of peek its head up when this does take place. Okay, continue on. You do have that bearish divergence still playing out, forming over here on the Nasdaq bullish percent index. We've seen this a couple of times throughout history, and also, bullish divergences form. And you also have that in the technology sector taking place here. It's still in an overbought condition, no bearish divergence. But remember, these bullish divergences have been super helpful to finding upside moves in the market. And the bottom, by the way, in the XLK, and the recent run up over here. But then if you look, to the left of the screen, you see a bunch of different bearish divergences that I've been highlighting through the years. And you could see, oh, what happened here? Well, the market ended up going down a little bit here. What did the market do? Nothing, right? It just actually kind of flatlined. It had to consolidate. Over here, right? Market went down. Over here, market went down before going up. You have it down, 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 right? So it's going to be important to see, where this goes if it does form a little divergence. Even if it doesn't, though, at this, current time, just know that it is in that overbought condition. Let's take a look at the Mag 7 today, right? We were down on the day. So what helped the Mag 7? Or what helped the S&P 500? I would say basically Tesla held up the market. Apple was down, right? Google was down 1.79% after obviously running far and far. So it's taking a little bit of a breather. Meta was up about 1%. Nvidia was down slightly. Amazon was down slightly. And Microsoft was basically flat to slightly up. So where do we stand with all these Mag 7s within what the market priced in for this entire week? And in order to know that, I look at their weekly expected moves. That's one of the things that I do post in that Patreon or Discord. If you do sign up for the $16 a month every week, I give you these. And then I also have my Asher bot where you can manually type in, whatever eyeball range that you want. And then it'll be an equity, whatever equity that's tradable with options. It'll give you a range of risk for a week, a day, and or a month, whatever time frame you choose. So this right here is the weekly expected move for Tesla. This is what the options market priced in. And if you think of this in terms of a distribution curve, what this is saying, this upper level and lower level is saying this is one standard deviation of risk, right? 68% of the time we close within these levels. And then if you go out to two standard deviation levels, 95% of the time, I know I'm, just rounding here, but that would be the two standard deviation, which I also give those as well. So where do we stand for the week, right? The week started over here. The last week closed right over here, right? So you get plus this way, minus this way. And you could see we're kind of nearing the upper bounds of the expected move for Tesla. And we're not quite there yet. So if we continue this kind of move with Tesla, I'd be paying attention to about 452.77, which would be the expectations of the week. So what else is going on here? Take a look at Apple. Apple, right? Started close last week here. We started with a nice big move higher on Apple, and we drove outside of the weekly expected move. Now, when this happens, you can very well break and go to two standard deviations. But what's typically more likely to see is to see price consolidate and or pull back in and doodle around the lower or the upper or lower weekly expected move. So today, what did we do? Well, we came back in, we broke through that week to day VWAP, and we just doodled around the upper weekly implied move, which is at 251.93 as it stands in this moment. And we still have a couple of trading days left in the week. Microsoft, you can see we closed the week right over here. And since then, we kind of just been drowning a little bit lower, staying underneath that week to date VWAP. And we came pretty much darn near close to the lower weekly implied move within, a buck or two. And this is over a $500 product. And we haven't quite cracked it or tagged it yet at this moment. Take a look at Google. All right, Google closed right here last week, and we've been kind of just drawing lower. Notice how we're below a declining week-to-date VWAP, as well as a 5-day moving average that's starting to flatten out. And that lower weekly implied move, we basically, right there are approaching at these levels. So we have big names, right, in the Mag 7 reaching down already to the market's expectations, like Microsoft, right, like Google. Apple, as we previously stated, has already tagged it. So, that's done there. Can it go higher? Yeah, obviously. But right now, from a terms of probability perspective, perspective, it's kind of at its happy place. Tesla's still a little bit more of upside room. Let's keep on going. This is where it gets a little interesting. Amazon, outside of its weekly expected move, it's had a little bit of a breakdown below week-to-date VWAP and below a declining 5-day moving average. Now, the reason why I point this out is because, remember, one standard deviation, 68% of the time, there's the probability, right? We're already talking that there's a high probability that we can come back up into this range based off of that. So what I did here was I went ahead and looked at a couple of different indicators. I applied the 2 standard deviation move just in case, because if we were to get out here, we're talking 95% chance that we close back above it, which is a high probability. And I like to take trades that are high probabilities. And then you look at the RSI and you have a bullish divergence forming. So you have Amazon, right, breaking to new lows, on the 15-minute chart. And then you also have higher lows right here in the RSI. So now we're kind of approaching this area within here that if we start to break up, this could make a good intraday trade or a, day to 2-day swing trade to try to play it back up to the week-to-date VWAP and or that upper weekly implied move into this happy place for a couple of bucks per share. Obviously, you can hold it longer, but just be aware you are fighting the trend. This would be fading the shorter term trend, looking for some relief. That's what, that's why I'm kind of highlighting the risk here to the potential reward. It can make sense from a smaller time frame. NVIDIA basically flat on the week, but where did we start? We started by ripping up higher right into the upper weekly move. It hit its expectations, kind of came down from that point, right? We're stone's throw away once again from a new all-time highs. It's just taken a little bit of a breather and it's trading well within the market's expectations. And Meta too, right, came home to the lower weekly implied move. And what did we do? What it's typically, likely is to see it just doodle around, and we're just doodling around there at that lower weekly implied move for Meta. Okay, let's go ahead now and hop into the conditions of the market. So we're still seeing traders reach out further. So this is 6,700. We have traders reaching out to 6,800. The main call wall right now is currently at 6,700. So we're in this kind of area where it's like there's a lot of liquidity up here, right? And if we get above 6,700, it could be quite bullish, but we're not above there yet. So if we start to slip, right, we can slip down, right, to 60, or we mentioned 6,600 earlier. This is about 60. I think this is 6,650 as it stands right there. That could be an interesting level as well. Now, remember, 6,650, we're currently below. 6,700, we're currently below. We've already reached into these levels and started to push away. And what I want to call out here is where the gamma flip line is. The gamma flip line is right here. So we're still in an environment where dealers are suppressing volatility because they're looking to buy the dip and sell the rip. And if you start to get under the gamma flip line, which currently is at 65.90, right? It's more of a zone. So keep in mind, this will update tomorrow morning. I'll post it in the Discord as well. 65.90, it's in the zone. So when we kind of come into these areas, if we were to break down through the weekly expected move, be very careful because you can really see volume pick up and volatility pick up if that was the case. But as it stands right now, we're still above it. So we're looking for dip buyers, right? Them to try to buy the dip, then sell the rip, and volatility continues to get suppressed. Now, tomorrow we have 6668.95 as the upper daily implied move, and the lower daily implied move is 6606. And that's what just one standard deviation of risk that the market's pricing in for tomorrow. Now, if we were to break down further, I want to reiterate this white volume weighted average price is the September low volume weighted average price. It's also the month of September VWAP, and we have not tested that one time yet. So when we come to test this, just be aware that it's there because sometimes the very first reaction off of those type of levels, they can be, the bigger reactions. So, not to say, if it comes down here, buy right away, but if we start seeing strength from those levels, that could create some good opportunities. We look at the direction of the 5-day moving average amongst SPY, Qs, IWM, semiconductors, biotech, and DI, which is the Dow Jones Industrial Average. We're starting to see some signs flip, right? Turn to yellow, which means what? It means that the 5-day moving average is still turning up right now, but price is currently below it. So it's just a cautionary sign saying, hey, is the trend changing on the shorter time frame for these products, mainly being SPY, Qs, and IWM? If so, what you want to see happen is prices start to come back up and get back above the 5-day moving average to continue the trend higher. It's just telling us right now to be more cautious. Now, remember, we've talked about gamma flip lines. We talked about the Mag 7. I want to just reiterate some of the systematics, right? So when we are near this gamma flip line or cross below it, it could create, more extravagant sell side. Not only are dealers forced to sell into that selling, but then you also take into account CTAs, so commodity trading advisors. They have been, on very, very elevated levels here, and they came from very depressed levels, right? This is what happened on the S&P 500 when we're at these levels. They sold into the selling, boom, and then all of a sudden they can become buyers, and it really does help push the markets higher. So when we're at these exhausted levels and we start crossing below gamma flip line, they can turn into sellers, and you can see really, some extravagant moves in the market, which creates more opportunities for shorter term traders like day traders. But from the flip side of it, when you're a swing trader, you tend to see much more shakeouts, fake outs, whipsaws take place. So keep that in mind. You could also look at vol control funds, and vol control funds, very elevated levels here too as well. Remember, they also help to see the buy side in equities, right? But then also when they, were exaggerated levels, you saw the market sell off, and they helped with the selling. Over here, same exact thing took place. If you take a look at systematic positioning index, this is where tier one, this is pretty cool. They just basically looked at CTAs, vol control funds, risk parity funds, and what they did here is put it together in a systematic positioning for a Z-score. They're basically showing it where it currently stands dating back to 2012, and you can see it has been elevating after that recent sell-off, but it's still not at like a super kind of elevated level like we saw in 2024 there. If we continue on and look at another interesting chart from Tier 1 Alpha that they provided, is the S&P 500 versus the equal weight, and it's a rolling correlation, and they're just kind of marking out that this thing continues to break down, and it's broken down throughout history, and it hasn't been the greatest time for the markets when we've seen these breakdowns occur. And you can see this thing, I showed this a few days ago too as well, and this thing just keeps pressing lower and lower. It's quite interesting. Let's take a look at the expected moves going into tomorrow's trading session. First, actually, let's take a look at the week. Where do we stand for the week? Basically unchanged. We're slightly down, and we have wide open range of risk for the week. We did tag our quarterly expected move, and we came close to the month to date, not quite hitting it yet at this current moment, but we did reach into what the market priced in for the entire quarter. Going into SPY today, so you can get an idea of what this looked like. The expected moves for the daily basis have been quite effective these last few trading sessions. And you can see here, where did price come to after all that selling that we saw earlier in the trading session? If you're trading, look at that tag of the S&P 500, basically to the penny over here. And from that point, we kind of came back up, we came back in, and we just doodled around a little bit higher here. And we are still below these key averages. So the reason why I'm showing you this is just to show over time of watching this show, you can see how they interact, times that we break above it, maybe sometimes when we gap above it or gap below it, what happens. So you can just kind of keep a rolling tally in your head of how price works in and around what the market priced in for risk. These aren't just levels, right, that I'm just drawing on the screen. I'm not just guessing it. It is a mathematical equation looking at the volatility or the options chain of these products. Okay, now going into tomorrow's trading session, we have 657.81 to 655.89. The blue line, by the way, is actually, I manually did this math for the AsherBot. So when the AsherBot loads, which is going to be into early morning tomorrow and or 9 o'clock PST, 12 a.m. EST. It'll update to give these levels, which is, it's going to be pretty much right in around these areas. Okay, so that would be the lower implied move. If we start to go to the upper daily implied move, just pay attention. We have our quarterly implied move still there. We're below a 5-day moving average. The all-time high VWAP is trending lower. The week to date is moving lower. We warned about that in yesterday's video, saying if we come up, pay attention to how it's still declining. Guess what? We tagged it. Well, we came close to tagging it, and then it started to sell off. You might be looking at saying, hey, this is kind of just flaggish, kind of bear flagging, broke down, bear flag. Yeah, I would agree. Just be aware, right? These contractions, you can still see pops up, gets people sucked back in, but just pay attention to where everything is at that time, where it's all correlating, because if you get hit down, that could create some opportunities to the short side if you know how to short, or you just be patient and see if it can break back up and you could trade to the long side. But right now, like I said, we already are seeing that kind of yellow warning sign on these trend changes, giving us, a moment of caution after ripping all month. And now we're kind of coming into the end of the month and, and the end of the quarter. So there's a lot of new stuff taking place. If we were to break down, remember just this area and then watch that September low VWAP, right? Say if we do break up and then come back down tomorrow or whatever the case is, watch to see where this is at that that time, because if we come into those areas, that you know, like I said, could make a good intraday trade there as well. That's all I got for you on today's video. I hope it helps out, give you some insight in these markets. Like I said prior, if you haven't done so already, make sure to subscribe if you like this type of content.